Hello, everyone. Thank you for watching today. We'll be going over a Chapter 3 homework problem for adjusting journal entries and the adjusted trial balance. This homework problem starts with the unadjusted trial balance and then gives us details for 7 journal entries that we need to make to adjust the trial balance to what the ending period balances should be. We're going to post those journal entries in the general journal and then to the adjusted trial balance, editing the amounts in the unadjusted trial balance with the journal entries that we make. Now, we can see the unadjusted trial balance here. It's as of August 31st, so all of our journal entries dates will be as of the last date of the period, August 31st. And these are the amounts that we have. Data needed to determine the year-end adjustments are as follows. Our first journal entry is unexpired insurance at August 31st, $1,800. Now this means our unexpired insurance should be $1,800. Now let's take a look at what the prepaid insurance actually is $7,200, which means that we have to subtract the 1,800 from the 7,200 to know what we need to adjust our prepaid insurance by. And so if we take that, that's 5,400 is going to be our amount, which is going to be the same for both the debit and the credit. Our date is going to be August 31st, and then our expense account is going to be insurance expense. And then the other side that we're adjusting down is prepaid insurance. Date for the next transaction is also the 31st, and let's take a look at what that one is. That is supplies on hand at August 31st is $300. Our unadjusted trial balance, the supplies is 1,980. And so we take that minus the 300 and we get 1,680. So that's going to be both our debit and our credit. Our credit is also going to be supplies because we're reducing our supplies. And then the expense is supplies expense. The next journal entry is depreciation of the building for the year is 7,500. Currently, we don't have any depreciation expense accrued, and we can see in our expense section there's no depreciation yet. So we need to depreciate the amounts that they tell us for these problems, for both depreciation for the building and depreciation of the equipment. And our depreciation expenses specify for building, for equipment, and then we have our accumulated depreciation building and accumulated depreciation equipment accounts. And I'm just entering both the debits at once and then going to the chart of accounts. And I'm going to enter in the credits, which is the accumulated depreciation on both of these. And this is just because this is what makes it faster for me to enter it. So our depreciation expense building is going to be our debit, and that's 7,500. And then our credit is to accumulated depreciation, which is that contra account for an asset. So it reduces our asset, our net book value of our buildings. And then depreciation expense, buildings or equipment, that's going to be 6,000. Accumulated depreciation, 6,000. The next journal entry is rent unearned at August 31st is 2,250. The unadjusted trial balance has that amount at 6,750. So if we subtract 2,250 from that, we get 4,500. So that's going to be um, our revenue that we earned from this unearned rent. So since unearned rent is a liability and we need to reduce it, we're going to debit our unearned rent liability of $4,500, credit of also $4,500, and we can't forget the date, and rent revenue will be our credit because that is the revenue that we have to accrue that we earned by providing the place, by providing the property for the month. Accrued salaries and wages at August 31st is 2,175. Currently, there are no salaries and wages payable on the unadjusted trial balance, so the entire amount of 2,175 has to be accrued to salaries and wages payable. I would think salaries payable, but in expenses on our chart of accounts, it's salaries and wages expense, and we have to abide by the chart of accounts of the business. So salaries and wages expense and salaries and wages payable for the full amount of 2,175. It's both our debit and our credit. And the final journal entry is for fees earned but unbilled on August 31st is 12,700. Now, this doesn't say total accounts receivable is 12,700 because then we would take a look at our accounts receivable and do a subtraction and we would know. However, this is fees earned but unbilled. These fees have never been entered into the accounting system yet, and so we need to accrue for all 12,700 as revenue. So we're going to debit accounts receivable for 12,700, and then date is the 31st, and fees earned is our revenue account. We can note in our chart of accounts, we only have two types of revenue, fees and rent, and this is fees unbilled. Okay, let's just check our work for this problem, and you can see that we got 176 out of 176 on these journal entries. So now we know when we're going to the next problem, which is the adjusted trial balance, that our amounts are correct. And so what we're going to do is we're going to take the unadjusted trial balance and we're going to add to it all of the journal entries that we've made so far. So we can see them all on the screen here. Insurance, so cash. Is cash impacted by any of these journal entries? No, because cash is not affected by adjusting journal entries generally because cash transactions are part of the daily transactions by the business. Let's see our first entry here, prepaid insurance, that got reduced. Um, and so we can take the 7,200, subtract the 5,400, and we get the 1,800 that should be in prepaid insurance. Accounts receivable, we only had one entry impacting that, and that was the 12,700. And so that increased accounts receivable because it was a debit. So we have our debit of 38,400 plus the 12,700, and we're going to have 51,100 as the accounts receivable. Supplies on hand, we know that that should be 300 because we adjusted it to 300 during our month-end balances. Land is not affected by these adjusting journal entries because we don't depreciate land. Building is also not affected. Accumulated depreciation building is affected, but the building historical cost account, which is the building account, is not impacted by the adjusting journal entry for depreciation. And so that's going to be the same, as is the equipment 135,300. And the accumulated depreciation building is going to be the amount of accumulated depreciation previously of 87,550 plus the 7,500, and that is $95,050. And accumulated depreciation equipment is the same amount, so it's 97,950 plus the $6,000, and then we get a total of 103,950. Accounts payable, I don't believe we had an accounts payable entry. So we can just double check, right? But I don't believe we adjusted accounts payable, so that would be fine at the existing balance of 12,150. The unearned rent, we did adjust our unearned rent over the period and to be $2,250. So that changed, and that's also the result of the 6,750 minus the 4,500 that we reduced it by. Salaries and wages payable, that's going to be the amount that we accrued of 2,175. Capital accounts, we didn't have any entries impacting the capital accounts in this problem, so those are going to remain the same. Fees earned, we increased our fees earned by $12,700, so we take that plus the fees earned on the unadjusted of 324,600 to be 337,300. And then the rent revenue is let's see, we didn't have any rent revenue previously, so it's just going to be the 4,500 that we accrued during the quarter or during the month at this month-end journal entry. Salaries and wages expense, we already had 193,370, and then we accrued another 2,175. So the balance is going to be both of those added together of 195,545, and then utilities expense we did not accrue anything for, so that's the same, 22,800. Advertising expense, oh no, never mind. The utilities expense is 42,375, and then the advertising expense, we also didn't accrue anything, so that's the same. Repairs expense was unaffected, so that's 17,250. Depreciation expense building, we did that. That was 7,500. Depreciation expense equipment was 6,000 because we accrued that. Insurance expense didn't have anything previously, so that's going to be the 5,400 we accrued. And then supplies expense, we also accrued for supplies expense, which was 1,680. And then miscellaneous expense we did not affect. So that was $6,075. Now, let's check our work just to make sure that these all add up. Our debits and our credits add up. So we have to total all of this. So now we will add up all of these amounts. So that's 7,500, 100, 1,800, 300, 112,500, 150, 250, 135, 300, 15,000, 195, 545, 42,375, 22,800, 17,250, 7,500, 6,000, 5,400, 1,680, 6,075. And then our total of all the accounts is then 778,375. And if we add up all the other side, all of our credits, that would be 95,050, 103,950, 12150, 2250, 2175, 221000, 337,300, and 4,500. And the total there matches. That's also 778,375. If we check our work here, our total is 103 out of 103. And that is all that is required for this homework assignment. Thank you everybody for watching. Make sure to subscribe to get more tips on your accounting homework, and I wish you all the best of luck in your accounting journey. Thank you.